The stock market moved lower on Wednesday after the Federal Reserve announced it would soon begin raising interest rates in March as it looks to combat a decades-high surge in inflation and ease concerns about a wider stock market sell-off in January. With inflation well above 2% and a SDR, stocks have swung wildly so far this week, with the S&P 500 briefly falling into correction territory, at 1.10% below its record high, as market volatility surged. The index is now on track for one of its worst starts to a year ever. Amid the wider sell-off in tech stocks, the Nasdaq was the first index to hit correction territory last week, currently around 14% below its record highs last November. Despite a recent surge in market volatility, most experts believe the added uncertainty for investors won't deter the central bank from sticking to its forecast for interest rate hikes in 2022. It's premature to assume the latest volatility and weakness, in and of itself, will cause the Fed to blink, e.g., adjust the narrative, said Liz Ann Sonders, chief investment strategist for Charles Schwab, in a recent note. Despite the somewhat dovish statement from the Fed, stimulus withdrawal is going to remain a headwind for markets over the next several quarters, predicts Vital Knowledge founder Adam Crisafulli. While investors hadn't been expecting the central bank to announce any major policy changes, concerns about more hawkish policy and the removal of pandemic-era stimulus have been rampant, dragging markets lower so far in 2022. Readies' March interest rate hike to fight inflation surged despite stock market plunge. Forbes market jitters have S&P 500 flirting with correction territory. Forbes stocks surge after Powell says Fed not afraid to raise rates further if higher inflation persists. Forbes.